Good evening, everybody. Yep, we're having a nice spring evening here in Pittsburgh. And as one of my mother's favorite poems, spring is sprung, the grass is riz, the bird is on the wing. Oh my word, how absurd. I thought the wing was on the bird. Anyways. All right. Just so that you can see what we're orienting toward on the weekend of the 27th and 28th. We're going to be doing a full-scale training on the T-line. Now that means all we're doing is taking all the high profit signals and patterns and now looking at them from a different point of view, which is getting the enhanced analysis prognoses with the T-line. So the reason is so important. Thank you, Becky. Yeah, there's the link to it. The reason the T-line is so relevant is if you look at any chart and you go, I mean, it's not hard to add the T-line, which is the 8 exponential moving average, onto your charts, and then go back and see how it works so relevantly with candlestick signals and patterns. And the reason it is so relevant is because nobody has the T-line on their charts. So it's not acting like a magnet like the 50 and the 200-day moving average. John, yes. And I will show, as a matter of fact, we had a few inquiries about how the futures market work. So I've got a few of the things that I trade that we're going to look at tonight. So the relevancy of the T-line becomes much more critical when you see how it works with the any trading what do I want to say, any trading trend. Notice what the Dow did today. It was down a little bit, just below the T-line, but notice the nature of today's trading. Kind of an indecisive day. So each morning or each evening, we can make a kind of a general assessment of what the overall market is doing. Now, if you go to the NASDAQ, even though it traded lower today, maybe a dark cloud figure, but what was the most crucial element that didn't occur today was that they didn't trade back below the T-line. So there is one simple assumption you can make using T-line analysis, and that is that the longer or the as long as you're above the T-line, especially without a sell signal, the probabilities are greatly in your favor that you're still in an uptrend. There you go. I'm cutting in and out. If I'm cutting in and out, I guess the best thing to do is up in the very top right-hand corner of your screen, there's a little X with a circle. Hit it, that'll log you out, and then log right back in, and maybe you'll probably get a better connection. So it's not this system, it's usually the connection with whatever servers are using. So that's the quickest way to correct things. So if we look at the people often ask, well, why do you even bother looking at the Dow? It's only 30 stocks. Because we know that the Dow is what everybody watches. The S&P 500, still kind of the same scenario. It was off 8 cents today. But what was the overall analysis? Even though we're in the overbought area, we don't have a sell signal. We're still trading above the T-line. But we know the common sense analysis is, I do not have sound. Oh, boy. Yeah, the T-line is the black line. Let's see. Oh, Becky, do you want to type in for Mitch to hit the red X and re-enter? Or Rick, do you want to do that? So, but here is the most obvious thing, is the transportation index today. Look at what the transportation index is doing. If I can move this. It was up strong. Now here's the simple logic. If the, yes, this webinar is recorded. What exactly does the T-line represent? It represents pretty much a Fibonacci characteristic of human nature. Now, when I say that, it's because it seems to follow very closely as a kind of a natural support and resistance level. So, Robert, that will give me an opportunity to make this statement. And this is probably the most important statement with the T-line and candlestick signals. If candlestick signals are the graphic depiction of what's going on in human nature, the buying and selling during any specific time frame, and the T-line acts like a natural support and resistance level, a Fibonacci characteristic of human nature. When you combine the two, you've got an extremely powerful combination for visually analyzing where the strength or weakness is coming into a market. Yes, right now, Joe, yes, you got a J-hook pattern setting up. Now, look where it's supported, right here on the T-line. Now, got to remember, nobody has the T-line on their charts. The 200 and the 50 simple moving average are on everybody's charts around the world. So when somebody is making a decision, especially the big institutional traders are making decisions, they're usually making their decisions based upon a support and resistance level of those moving averages. So we constantly get asked the question, why don't you use the exponential moving, the 200 and the 50? And the answer is we're not using them as our indicators. We're using them to see what everybody else is doing at those indicators, since that's what they use. We've got the graphics to tell us what happens at those moving averages. What is the green? Little green line is the 3T line, which also acts as a confirming indicator in two cases. The further away you move from the T line, the more relevant the 3T line becomes. And if you don't see any selling or a close below the T line and the 3T line is not closing below the T line, that's further confirmation that the uptrend is remaining in progress. No, the T line works. Burn, everything that we look at on a candlestick chart is the graphic depiction of everybody buying and selling during that specific time frame, which means everything we have on our chart is what they call fractal, meaning they work just as well on the monthly chart as they do on the 1 minute chart. Oh, this little green line, or this gray line is the, this little green line is a 3T line. This gray line is the 34 exponential moving average, which works relatively well. Okay, so because look where, so if nobody has the T line on their chart, except us and some of the other people that we've been doing trainings with are starting to use it. Notice when it pulls back, if nobody has this on their chart, this is telling us that that's kind of a natural support level. We basically have the T line to illustrate that. And that's what we're kind of going to lean toward as we go through the charts tonight. So here's the simple logic. If they are buying on a J-hook pattern in the transportation index, implying there's going to be more upside, that probably the force of the selling in the other indexes aren't going to be all that great. Because what happens in a major market reversal? All the indexes start selling off at the same time. So if one is selling off and another one is trading positive, all that means is you're looking at shifting of funds versus any major reversal. So the reason we're emphasizing the T-line is I used to trade relatively well. I say relatively well. When I was a stockbroker back in the 70s and early 80s, I was still one of the worst investors in the world. The T-line is the 8 exponential moving average. So when candlesticks came along, at least it started turning me around that I was starting to make money instead of contributing money to the markets every month. Then when the T-line, which was brought to me by Rick Sadler, who was one of my first private training students, who now runs his own website, trading candlesticks in a different method. But he said, take a look at the T-line, the 8 exponential moving average. We call it the T-line just short for trigger line. They're very simple. If we see a candlestick buy signal and a close above the T-line, we can stay long until we see a candlestick sell signal and a close back below the T-line. With the caveat, the further away you move from the T-line, the more likely you're going to come back and test it. So we can make better decisions based upon recognizing the patterns that we're seeing, and then we're going to go through the stocks that we're pretty much trading right now. And the reason for that is they usually have the best charts. That's why we're recommending them. So you can see the fry pan bottom, and you can see when the uptrend started, kind of a cradle pattern that closed above the T-line. That stopped the downtrend. That started your uptrend. And how long do you stay in a fry pan bottom? Very simple. As long as it stays above the T-line. This one we recommended today, make this a little bit smaller, because of, look what our little slow curve breakout was telling us. It had a T-line crunch, which told you they couldn't close it below the T-line. They broke through this level on a slow curve. This is the type of move that you expect. This is one of the slow curve breakout is one of the top signals / patterns that allows for huge profits a high percentage of the time. So it's a very simple trade. If you're starting to buy on the breakout, one of two things are going to happen. You're going to get a huge move to the upside, or if it fizzles, you're right back out of the trade with a very small loss. But if it works, you get huge gains. So we watch things to see when the next breakout. So this is kind of an important factor. Everybody likes to find the ones that are going to have huge price moves. And there's our little slow curve breakout. But we can also identify wave 1, wave 2, kind of a wedge formation, that if it breaks out through this level, we can anticipate wave 3 being the same magnitude as wave 1. So it gives us the ultimate entry points. Now, it also gives us the ultimate entry points on high probability situations. There was a J-hook pattern setting up right here. Made it perfect for entry the next day. If it opened positive, you had wave 3. Whoop, it didn't open positive. Now we get that little slow curve again, and we're right back at that resistance level. If it opens positive, it tells us there's a new strength in this pattern that we probably have hit the ultimate time to be buying. So I used to look for things that not only looked good, but had a big percentage upside potential, at least 10%. But I'm kind of modifying my trading, because if this is a high probability breakout, I don't know whether I anticipate it's going to be, on this case, more than 10%, but I am looking at situations where the probabilities of making money are going to be good, because no matter what the probabilities, or if the probabilities are good, I'm not so much concerned. I'm still looking for probably at least 10% upside, but I can put all sorts of strategies on, whether I'm buying stocks on margin, whether I'm buying calls, or whether I'm buying call spreads. The number one factor is trying to find the high probability trade setup, and then figure out the best strategy to take advantage of that price move. So we recommended Alaska Air down here when we had a bullish signal closing above the T line. Then we had a doji sandwich. Where do you think our next target was? Right where it closed today. Now, the reason that this combination of analysis is that our transportation index looks pretty strong. That means a lot of the stocks that we can look at in that sector are probably going to be acting fairly well. As we can see in American Airlines, what do we got set up right now? This is our bobble pattern. Hits a resistance level, pulls back, and what's the criteria for a bobble pattern? It comes back up through this level. And what tells us it's probably coming back up through this level? They couldn't close this below the T line. Now, where do you think your next target is? Well, your first target is probably right here, telling you you're in the right direction, or at least we'll have a profit. Second target, probably the same magnitude as wave 1, brings you up here, which I think comes up to some of the other resistance levels. So anything that we can look at that tells us the probabilities of more upside is that much greater. Look at big. Bobble, breakout. What do we expect now? Wave 1, wave 3 up here someplace. The gray line is the 34 EMA, which works reasonably well. Now, the nice thing about candlestick analysis is, what is the number one criteria for making an analysis of a price move? The signal. Bullish engulfing signal. Then anything else you put on your chart adds to your confirmation, or improves your probabilities of where the prices might move. Back again, battery backup saved both. Okay, Carl, good to have you back. So, as you can see, my charts aren't, that's what I want to say. My charts aren't that cluttered. The 50 simple moving average, the 200, the 34 EMA, because it works reasonably well, the T line and the 3T line, and stochastics telling us whether we're in the overbought or oversold area. Now, my late friend Dave Elliott of Wall Street Teachers, when I looked at his charts, I would always get so hungry because his charts looked like a big spaghetti bowl. There were so many moving averages on it. Rob, the 34 just seems to work pretty well as a support and resistance level. It's not the major one. I would call it a minor one. The majors are the 200 and the 50 and the T line, and the minor one would be the 34. The red one is, yes, the 200 simple moving average. The blue is the 50-day simple moving average. Now remember, we're not using those to make our decisions of when to buy or sell. We're using those to watch to see what everybody else's decisions are at those levels. So we know what this pattern is. This is a bobble breakout, which is a J-hook pattern that you can see the distinct resistance level and then breaking through the second time. But if you took out the 200-day moving average, you can still see that we have a J-hook pattern. The bobble pattern is just a more defined recognition of that pattern. Things like Avid, where you had a big gap up, this is what improved my probabilities or my profitability dramatically. There was a sell signal right here, but what was the non-confirmation? It didn't close below the T line. So now I hold on to a position where I might have sold because I saw the sell signal in the overbought area. But at this point, once I put the T line on there, I hang on as long as I don't see a sell signal and a close back below the T line. Kosh, you can put whatever moving average you want to on your chart. If it works, continue to use it. If it doesn't work, take it back off so that if something else better comes along, you can put it onto your chart. So we have a lot of these positions. Notice where our Morningstar signal occurred. Doji bounced off the 50, closed above the T line, opened positive the next day. Not only opened positive, but gapped up the next day, breaking this downward trend channel. So with all this evidence, meaning a Morningstar signal, a bounce off the 50, a close above the T line, any positive trading from this point told us we are likely to break out from this level. I'll get to some more that have that kind of same bullish confirmation. My stochastics are 12.33, slow stochastics. Does the slope of the T-line mean anything? No. The T-line is just a moving average, and we're not buying or selling the moving averages. We're just using the T-line as a support or resistance level. So it has nothing to do with, well, let's put it this way. The indicator itself, meaning the candlestick formations, is more important than the T-line. The T-line is just a confirming indicator to tell us that if you see a sell signal and a close below the T-line, you can stay short until you see a candlestick buy signal and a close back up above the T-line. Now, if I had been short this one, I may have covered it on this day because it closed above the T-line in the oversold area. But this is what got us into this position, was your best friend. Notice all the what I call convergence analysis, all the things that you can visually see that told you there's been a dramatic change of investor sentiment. One, there was your doji, there was another doji, and then a doji gap up through the T-line, and also up through this downtrend. But just the fact alone that you have a best friend signal, a doji gap up, was your first criteria. Then everything else can be applied. Did it right here at the 200? Did it up through the T-line? Did it up through the 50? What does a best friend signal tell us? It tells us not only are we going to be in an uptrend, but probably a very strong uptrend. And so if you bought into J Bell because of this bullish confirmation, what's the criteria now for staying in it? As long as you don't see a sell signal and a close back below the T-line. So what you're trying to do is get stuck in these type of patterns. There's your big inverted hammer, bullish confirmation, closing above the T-line. How long do we stay in this one? Until we see a sell signal and a close back below the T-line. Very simple. So it used to be I would anguish of whether I should be getting out or should I get out here. Now I can just kind of relax and say, well, got a possibility of a reversal, but I'm going to stay long until I see it close below the T line. That's on VC, which is one of the auto parts. Now, that also puts us in a situation where if you can identify that a lot of a sector, like auto parts stores, are acting well, look at what our buy recommendation was caused on Delphi. Look at all the dojis sitting right smack dab on the T line and the 50. Then they told us which way they were going. Now, how long do we hold on to this? As long as we don't see a sell signal or close below the T line. It takes, let's say, the anxiety and the emotions out of your decision making. I can make a decision that if I've bought on a best friend signal gap up through the T line, stochastics coming up after a series of dojis, I know what my criteria is after that. Just stay long until you see a sell signal and a close below the T line. A sell signal and a close below the T line. With the caveat, and let's say we were up here and the T line was down here and we are way up above the T line, we saw a sell signal, yes, now I'll be more apt to take profits because remember what we said, the further away we move from the T line, the higher the probability will come back down and test it. Okay. So anyways, once you get into a position like this, if I've got 10 positions on and 6 of them are doing this, that means I only have to concentrate on making a decision about 4 instead of all 10. Now, I'm also looking for situations where the probabilities are extremely high, but I've got a bullish trade. Not quite. So we had this little wave 2 going into wave 3. Today it did a doji. Closed absolutely flat, but did a doji. But because we know what the doji rule is, or the doji sandwich, we know if this opens positive tomorrow, we can start buying with a high degree of probability that this candle right here is going to be the same magnitude as this candle right here. And what's that tell us? It tells us they've broken out through this level. Now we've got wave 3 in progress, wave 1, wave 2, wave 3, and we know what the results are of a doji sandwich. More upside. So I don't know how far this will go up. I just know the probability is that if this opens positive tomorrow, that we're heading higher. Now I've got the opportunity to put different strategies on, where if this is wave 1, this is wave 2, and the prospects for wave 3 is the same as wave 1, well, the other consideration is this was moving up when the market was moving up and the market consolidated. If the market is moving up, yeah, we got much better chance that this would go from, let's say, what did this go from? Say 25 to 40, 15 points. That means we're going to the $55 area. Will it get there? Well, we don't have to see it get there. We might want to buy the 45 calls and sell the 50s. And let's say hypothetically that is for $1.10 for that spread. Well, if it goes up past 50, not quite all the way up, that $1.10 now goes to $5. That's a decent rate of return. I count the waves just by wave 1, wave 2, expect wave 3. That's as sophisticated as my wave count. Now, if it goes up here and starts backing off, now this becomes wave 1, wave 2, maybe potentially wave 3. Would you just buy a call? Yes, you could do that if that's your nature. If you want to buy calls outright. But when we do our training, my mouse is lagging. Okay. Get moving, mouse. I'll try to beat it a little bit. was I saying? Oh, when we do our option training, which we're going to be doing a full weekend of that pretty soon, or at least a full Saturday, there are better strategies than just merely buying calls. You might, math-wise, be much better off buying a call spread, or maybe even selling a put spread. Remember, buying a put spread means you're hoping it's going down. Selling a put spread means you're hoping to go up, and it doesn't have to go up very much for that put spread. So we're going to be doing all the prospects. Now, there are two things that give us a huge advantage. One thing that gives us a huge advantage is because of candlestick analysis, we've got a good prognosis of which way the price is going to move and what the price movement may be. But then the other part of that is if you're going to buy calls or different call strategies, what math makes the most sense? And that's what we go through. Okay. So anyways, this one, if I was buying calls tomorrow on this one, it would be based upon that I would expect a price move of this magnitude. Now, if it does go up here, probably the calls that I bought were doing well. And I can anticipate what's happening after that. There's going to be more upside. Now I can go into a different strategy. I might buy a call strategy or a spread. This is the start of a doji sandwich, a bullish candle followed by a doji. And there's a very simple doji rule. The price is usually going to move in the direction of how it opens after a doji. That's why you wanted to. That's why the ABCs of candlesticks is knowing the 12 major signals, 6 longs and 6 shorts, and the simple rules that go with them. Again, this is not a sophisticated trading method. This is just merely recognizing what the Japanese rice traders have illustrated for us over 400 years, and not only giving us the visual recognition, but telling us what the psychology was that created those signals or patterns. That was the same scenario on this. When we saw the bobble breakout, we knew that we could be buying on positive trading the next day because it was going to be moving in the direction. And what type of pattern do we have setting up here? Well, there's our bobble breakout, which is a J-hook pattern. And if this is wave 1, where is our expectation? Wave 3 is going to be the same magnitude as this move right here. Now, will it get there? We don't know. We just know the probabilities are extremely strong that that's the type of price movement that we can expect because of historic results. GTN. There was your doji sandwich that opened positive, and when it opened positive after this day, what was it telling us about our breakout area? The resistance area, resistance level was not acting as a resistance anymore. So if you were buying this stock right here, what was it telling you? It was moving in the direction of how they opened it after a doji, giving you the prospects of a doji sandwich, which this candle right here and this candle right here would be approximately the same. But what was it also telling you? It was telling you they weren't going to be resistant at this level anymore. So this is what I call kind of 2 + 2 analysis. But if I can see a resistance level and I know the pattern and I can add all that together, I know where my high probability breakout situations are going to occur, which is advantageous because that way you don't have to sit around waiting to see whether a pattern is working. We know exactly where the pattern breakouts should be occurring. Now, not every price move is going to work the way we want it to. Look at the series of dojis on defrog. And what is our simple rule that we apply? Is it possible double doji sandwich. Yes, you can always have a double doji sandwich, which is a bullish candle, a doji, and then another bullish candle. Remember, the doji represents indecision between the bulls and the bears, but the method of where they open it the next day after that tells you which way they've made their decisions. So this looked really great because of the series of dojis, bullish confirmation, but the probabilities of a price pattern working is extremely strong. But the important factor is probabilities, not guarantee. So when it came back down through this level, after moving that far away from the T-line, where do you think it was heading to? So just as a safety stop, I always have safety stops on. Because if something doesn't do what it's supposed to, I want to be out of it at a level where it's not supposed to be moving. Yeah, so you have kind of an evening star signal, even though you're not in the overbought area. But what did this tell us about the strength of this move? It wasn't there. Get back out of the trade. What do you usually get after a doji sandwich? Oh, maybe a small salad. Usually you have more upside. And that's where the McMuffin comes into play. Heartburn, there you go. So your safety stop would have been at the bottom of the doji. Because what do we expect after a doji? For it to open positive and trade positive to tell us we're still in an upward direction. If it opens and trades lower, what do we know about the doji rule? Do you use hard stops? Yes. Now, I don't necessarily have to put them on immediately. But if I was long here and after 15 minutes I could see it was trading down instead of the direction it should be moving, I say, well, I better put a stop right here just in case. That's when I'll put my hard stop on. But we know what to expect. I'll find another one here in a second. Okay, so this is what we call a McMuffin. Look where the Morningstar type signal occurred on RareX. Right smack dab here on the 50. Look where it closed. Then we had that long-legged doji, and then a bullish confirmation. So essentially we had a Morningstar signal followed by a doji sandwich. Now, the expectation is after a Morningstar signal, you're expecting more upside. After a doji sandwich, the expectation is more upside. So right now, we have the same criteria. It's not working as strong as we'd like it to, but you use the same criteria. You stay long as it doesn't close below the T-line. So if we see this long-legged doji, we already know what we need to do tomorrow. If it opens lower, we close out the position. It needs to open positive and trade positive to tell us our pattern is still working. Do you consider average true range? No. I get out where the simple analysis of the Japanese rice traders, if I was buying on this day and saw it whipsawing, but let's say even not knowing where this opened, but let's say I bought on this day, and I'm going to just speculate that, let's say it opened and traded down and then came back up through the open, telling me my signal was confirming. The next day, where would I not want to see it close? I wouldn't want to see it close down below the halfway point of the candle that told us that was a signal the bulls were in control. The Japanese rice traders have one formula in candlestick analysis, and that is the number 2. If you see a bullish candle and they tells you we should be in a reversal, If this is the candle that told you the bulls were in control, the bears shouldn't be able to close it back down below the halfway point of this candle. Otherwise, the bears are still in control. Please give us an example of an average true range. Just kind of the common, what is the normal range that a stock trades in, or what the magnitude of the candles are. Might you close it early on the long down wick and re-enter? Yes, you can always do that. Let's say I bought, let's say it came up here and I was buying, and then it came back down through the open. I'd probably stop out. Then if I watched it, why would I be watching it? Because we've already had a strong bullish candle. And then it started coming back up. I could always buy back in as it came back up through the open, because what was that telling me? That was telling me the bulls are still there. We can see that from this point to this point. So you can always get in and out. There's a lot of times where I'll close out a position because it doesn't look like it's working, but I'm not so proud to get back in when I see it's working. So let's say I bought here and I closed here and I bought back here. It used to be, man, they tricked me. I wasn't going to get back in this. But remember, what we're doing with the candlestick charts is telling us or analyzing what the bulls and bears are doing. Sometimes I get faked out and then I go right back in. Okay, the average trade range, okay. PK, yeah, I don't usually look at anything in the historical past very far back. I'm usually just watching to see what it's done recently. As I can see on this one, what it's done recently was it supported on the 50. It did a buy signal on the 50. It bounced back up off the 50. But I can see what's happening to the trajectory. I've got a buy signal, but I'm seeing a little bit of consolidation. And I know my doji rule that it's going to move in the direction how they open after a doji. So it better open positive and trade positive. If it opens lower, that's going to be one of the things that I had to get through my noggin after being one of the worst investors in the world was, man, I found this trading platform, candlesticks, that puts me in trades a high percentage of the time. I should make lots of money. Well, the one thing you always have to remember is a high percentage of the time, I kind of, generally speaking, say 70% of my trades are going to be positive. That sounds pretty good. But you also have to realize that 1/3 or 30% of your trades aren't going to work. So you have to know exactly what to do on the trades that aren't working. So if I've got something that has a high probability of working and it opens lower tomorrow, I don't kick myself. I don't have that mental stigma of saying, oh man, boy, am I stupid. Why didn't that work? I just say, oops, that's one of the trades that didn't work. Let's close it out and move on to something that looks more like this. Oh, we're going very slowly here. Let me see. Defrog. We also recommended ARA today. An ARA with this cradle type pattern went up adequately. Then it backed off. So if you bought today and didn't close it here, you still have the same criteria. You better see this open positive tomorrow and trade positive, because if it trades lower and comes back below the halfway point of this candle in the T line, what's that tell you about the strength of this reversal? It's not there anymore. Close it out. You take into consideration the pre-market candle movement? No. If you've got the pre-market movement of stock is usually based upon such a minuscule percentage of the overall volume that it's not part of your consideration. What we're looking for is when the market opens, what is everybody doing? Not just you've got Apple that may trade 6-7 million shares a day, but after hours it may trade 15,000. Not anything indicative of what. Would you buy if it opens up on this one? Yes, because if this was profit taking and it opens positive tomorrow, what's that basically tell you? The profit taking's over, our signal is still working. If your long signal setups are gapping up pre-market, do you get in them? Not usually. I'm still waiting to get in when the market opens positive. So on something like this, all I'm really looking at is pre-market. I can see up they're trading it up a little bit. That means I'm just getting ready to buy pretty quick when it does open. What's your opinion about credit spread, and do you use butterfly? I'm usually not using spreads on, because candlestick analysis is the graphic uh, assessment of price movement. I'm usually not trading things that don't have price movements. So, and I don't do all those legs. If I'm doing a bullish credit spread, which means I'm either doing a call spread or a put spread, it's going to be very simple. I don't want to be spending all night trying to analyze what type of legs and what type of spreads to put on. And we will be doing that when we do our weekend of the option strategies. We'll go into that in a lot more detail. Whoops. What did I just do? DWSN. Yes. You saw this heading up. Looked good. But then you had a bearish harami. Let me make this a little bit bigger. And so if this is in a bullish mode, what shouldn't it do? It should not close back below the T line. So if I was buying here, I'd be a little bit nervous here, and I would have closed it out here. Are you looking at bid-ask liquidity position? Yes, always. But when I do my scanning, I'm usually scanning for stocks that are trading more than 200,000 shares a day on average. But even with the bid-ask liquidity, even on stocks that are trading 450,000, the liquidity on the options may not be that great. So you still have to figure out different strategies. So for example, if I saw a stock that had a bid of, or options a bid of $3 asking $4, that first of all tells me the volume is relatively low. So the first thing I would do is if I'm buying, I'll put a bid in it right in the middle, 350. And again, these are different strategies that we will be going through to kind of improve the probabilities of getting into a good trade. Now, that's also saying, well, if I can't get into a trade very easily, that also means I probably can't get out of that trade very easily. Rob, the candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. So if the investor sentiment is telling you they're buying going into an earnings, that means they're the people that know more than I do are are buying, and so the probabilities are pretty strong that it's going to move in the right direction. On the other hand, if I see an indecisive trading day going into the close and I'm long, I'll close it out, because if I don't know what's happening based upon the what investor sentiment is telling me, then I'm just doing a crapshoot. And the big benefit I have with candlesticks is I know what the probabilities are every time I put a trade on. Is that a J hook at the end right here? That's what we call kind of a berry scoop pattern, but it doesn't matter. On this one, close out the position. Obviously, you can't go short because it's below $5. How much open interest are you looking at on average? SP, that depends. If I'm buying 50 contracts, which I haven't been doing recently, yeah, I want to make sure the open interest is good. So that's where I'd be trading Amazon, Apple, those type of stocks. If I'm trading less volume stocks, and I'm only buying maybe 10 contracts at a time, the open interest really isn't that much of a factor. Okay, let's get going again. So here was a disappointing one. And I say disappointing because we bought this on the basis of, I did that wrong, of this formation. A wedge breakout. And what do we expect from this wedge breakout? Probably the same magnitude as this move right here. Today it pulled all the way back to the T-line. That's not what we expected. So what's our criteria from this? It better open positive and trade positive tomorrow. If it trades below the T-line, we got to close it out. It's not doing what we expect it to be doing. So that's the terminology that is the most important element of candlestick analysis. Is when this broke out, our expectations were based upon historic results of this type of breakout that it's going to trade higher. Is it still about 70% accuracy when routing ENC? Do you use, whoops, I read two lines. Are you still about 80% accuracy for earning trades or higher or lower? Eric, that's all fits into, yeah, if I know that there's earnings coming up soon in a stock, that becomes my decision-making process. Are they buying this stock going into earnings, or is it just kind of sideways? I'm probably not going to, if I'm in it, I probably get out of it, or I don't consider getting into that trade. For day trading, what routing ECN do you use? For day trading, ENC do you use? Intelligent Arca. I don't know what that means, Guillermo. What charting package? This package that you're looking at is CQG. This is the grandfather, Electronic Communication Network. Oh, I don't know. I just use Thinkorswim for most of my trading because in my Thinkorswim account, I can buy stock, options, and futures all from the same account without having to move money around. Can you say it because no wave action? No, I was expecting wave 1, wave 2, wave 3. For some reason, they sold it off. But what was my ultimate criteria? They didn't close below the T-line. No, close below the T-line. You can have a lot of times where it trades below the T-line, but then closes above the T-line. Worst case scenario is you see something that you're long and it's, I can't find some, but it closes, there's trading below the T-line, you can close it out. But if you see it come back up, you can always buy back in. Let's see, it's falling during the day on, why would you wait until the end of the day? Because I don't know if it's going to hit here and bounce right back up. Here was a day right here. It was selling off. Why didn't I get out? Because we'd already had a breakout. Our expectation is we stay long now until you see a sell signal and a close below the T-line. Kind of the same scenario here. this chart is bigger than you think. This chart went from 40 to 100 and almost 110. And notice how it did it. There was your fry pan bottom breakout. There was your J-hook pattern. There was your shooting star. Look how far away you were from the T-line. So something like this gives you very good, I want to say, platform or playing field to see what to do exactly at the right time. If you're buying right here, maybe you're starting to take profits here, knowing that it's coming back to the T-line. Or you're buying back here, knowing that you've got a J-hook pattern set up. And you're selling here. Now, we also have another criteria that if we know we're too far away from the T-line, look what this did. If it was trading up here, look how far away you are from the T-line. So if you're in the overbought condition and you're that far away from the T-line, now we go to the next step. We flip to our 10-minute chart and see if when the 10-minute chart starts trading back below the T-line, we take profits. Because what's that telling you? We're getting out up here because we already know we're that far away from the T-line. And if they start selling below the T-line on the 10-minute chart, that's a good place, high probability place to take profits. No, if I'm going to buy something on a day trade, I'm probably pretty much buying it at the market. Now, that's usually on stocks. What would the sell signal look like? Tom, on which one? There's a sell signal on this one. There's your shooting star. Remember, there's 6 sell signals. The chart before that was on CGEN. But really, we haven't had a, well, we've kind of had a shooting star. Let me make this big. Yeah, really, you haven't had a confirmed sell signal. And this isn't even a sell signal. It's not a bearish engulfing signal. It's just a down day and an uptrend. So I'll look at this on the basis tomorrow that I want to see this open positive and trade positive, keeping our uptrend in progress. If it opens lower and trades lower, I'll close it out. But that doesn't keep me out of the trade because I know I don't have a sell signal. If it comes down here and then comes back up, I can always buy back. The big red candle, no, this is not a sell signal. Robert, yes, this is where you want to get your eyes trained on the fact that you've had a buy signal. You can also put your Fibonacci, I didn't do that before, but you can do that. Put your Fibonacci retracement numbers on. So you're kind of bounced off the 61. Now you're back up through the 50. Now, I don't use Fibonacci numbers to make my decision. I use the signal to make my decision. And then, what I just did there. Then I use everything else to see whether that was the reason why that the movement was at that level. Do you like to trade stocks with over 1.5 million shares traded per day? Yeah, I don't mind that. Yeah, the more volume you have in a stock, the more fluid your candlestick signals are going to be. All right, so if you're looking at the big stocks that trade big volume, this is where candlestick analysis tells you that you want to be in or not be in. What direction is Netflix going? Right now, that's so junky, you don't even want to look at it. Amazon. We can tell what's happening here. We had a big Morningstar signal down here. We have a J-hook. And what's our criteria right now if we're long? Is Stay long until you see a sell signal and a close below the T-line. Same scenario on Apple. There's kind of our bobble breakout. How long do you stay long? As long as you don't see a sell signal and a close below the T-line. Yes, so you can see whether a stock is trading up, down, or sideways. There's our J-hook pattern in NVIDIA. It also is holding up. And the other thing that you can see is it's basically using the T-line as a support. Now remember, that's more relevant than you think because that's kind of a natural support level. When it comes down and bounces off that level, that's a good indication that the bulls are staying in control. You're still in an uptrend. A dark cloud, yeah, but it's not a dramatic dark cloud. Now, it does tell us there's probably some selling going on, but until they actually close below the T-line, you got to assume that your uptrend is still in progress. So if I was long calls and I saw it open weaker tomorrow, yeah, I might close out my call positions thinking they're going to come back and test the T-line. But if they bounce back up, now I reassess that maybe I go out another couple weeks on my calls, buy another set of calls. There is no divergence in stochastics. Stochastics is showing you what the relevancy or the overbought or oversold condition is of what's happening right now. This right here has nothing to do with this right here. This right here was relevant for what was going on here. This is relevant for what's going on right here. This and this have nothing to do with each other. Oh, we're going slow here. I did no video. So we're watching pattern setups. We can see what might be happening here. If you look at the overall chart pattern of Papa John's, there's your big fry pan bottom. And what's our classic pattern? A fry pan bottom, it creates a strong price move. What's the prerequisite for a J-hook pattern? A strong price move. So we're watching this. If it starts back up, we know what the magnitude of our next wave will be, probably the same as this. We'll start looking at different option strategies. Oh, Eric, I'm sorry, I don't know which chart it was. Tesla, what's your assessment of this chart? Right now, you can't tell which way this is going. So you don't pay any attention to it at all. So there's going to be times when you can trade knowing what the signal is. There's our abandoned baby. Strong price move. Where do you think the first target is? Right here. But right now, I wouldn't know which way. So you move on to something else. You can figure out which sectors you want to be in by the ETFs. Right now, Nugget, gold, another one that pretty much tells you, yeah, you can't really tell which way it's going. Labu, also same scenario, kind of in a sideways trend, not really going in any major direction. So right now, when you don't have any major direction in the market, you still have price patterns that are going to work very effectively. This is Wendy's. Look where the J-hook pattern supported, right smack dab on the T-line. And look where the J-hook pattern is occurring, right here at the recent breakout. So what does this tell us? If they open this positive, we're in a J-hook pattern, wave 1, wave 3. And it becomes much more visually evident when we can see that it's supported right smack dab on the T-line. So the reason I'm showing the different patterns is this is floor. Look where it's supported. right smack dab on the T-line with a bullish harami. Came up through this level. Where do you think wave 3 is going to? Right up here. Wave 1, wave 3. Now, is this a big, huge percentage move? Definitely not, but maybe a spread of buying the 42s and selling the 44s. If it moves up to that level, could produce a, say that spread was $1, or I'm sorry, say 45 cents, and it went to $2. Yes, that's a good percentage move with much lower risk. AER, where do you think the next move is going to be? Look at our bobble breakout. Came up, failed, pulled right smack dab to the T-line. If you were buying right here, you had a high probability of making a good trade. How much time would you do? Well, you kind of visually recognize that this took maybe 2-3 weeks to do this. So you go 3 weeks out if they've got weeklies, or 2 weeks would be too short. That puts you in April. Maybe you have to do a spread for May. Now, just because you're doing May doesn't mean you hold it to expiration until the results of the trend is over. AL, we were going to short this one on weakness the other day, but it did a bullish harami, J-hook pattern. Where do you think your next target is? So when we teach the high profit or the top rank signals and patterns, we do it on the basis of pick out 4 or 5 strategies. You don't have to learn all 18 or 20 of them. Pick out 4 or 5 and learn them extremely well. No difference on the trading the ETFs tax-wise. Why buy stocks instead of just doing option strategies? Keep most of the funds safe. Rob, that's up to each individual. Some people like to buy options. Some people just want to buy the stocks. We're not telling people what to trade. All we're doing is showing people how to end the first bottom line analysis that everybody has to make before they put on a trade is which trade is good. Now, from that point, everybody makes their own decisions of what they want to do or how they want to trade it, whether they want to trade options, whether they want to trade stocks. That's up to each individual. So again, a bobble breakout on Beacon. Where do you think the next target is? Probably up here, wave 1, wave 3. So this is just recognizing the patterns that work very effectively. There's a J-hook pattern setting up on ARNA. Notice how ARNA got started with kind of a doji hammer gap up, best friend. ANAB, we made some good money with this when it did a bobble breakout, but then there was your gap up doji, lower open. It was time to take profits because where do you think they were heading? Back to the T-line. Now you got the prospect of a J-hook pattern starting to set back up. Zine, supported right on the T-line. Look at your bobble breakout or your J-hook pattern breakout. Strong price move. Long-legged doji spinning top. Right back to the T-line. Now if they trade it positive, what do you got going? Wave 1, wave 3. Pain. This is why we use the 34 because it usually works effectively on some stocks. But now, look at your left-right combo. Remember, the left-right combo is one of your strongest reversal signals. So you had a piercing signal, 3 dojis, a left-right combo, and a spinning top doji. What's that tell you? If it opens positive, there's your doji sandwich. Where's your next likely target? Right here. And if it breaks through here, now what do you have? Wave 1, wave 2, bobble breakout going into wave 3, the same magnitude as this one. Oh, Guillermo, no, that's way too many. When I tell Rick to do the double line, everybody can put in one request. Please elaborate on these other. There's about 18 different strategies that we call top rank signals and patterns. Oh, the inverted hammer is one of the 12 major signals. Look where this uptrend started, was off a Morningstar signal gap up. Look where the selling occurred, doji. So the bread and butter, the bricks and mortar, the ABCs is learning the 12 major signals. 6 longs and 6 shorts. And then there's different patterns, like the J-hook pattern, the fry pan bottom. There's about 6 or 8 of those. And then there's combinations. The left-right combo is a doji followed by a bullish engulfing signal. Again, hold on to your individual stock selections until I tell Rick to do the double line, and then type it in and we'll look at it. So we know right now that the transportation stocks are working well. So we'll look at JB Hunt, transport. If it trades up through this level, what do we got? A bobble breakout, likely to go to this level. Where on your site do you find these strategies and patterns? We've got the videos. If you go to candlestickforum.com, go to products and services. There's a whole list of training videos. So we're going to be doing a training session on the weekend of the 27th and 28th. It's going backwards, meaning a few weeks ago we did a training session on the top rank signals and patterns. Now we're going to be doing that backwards, meaning we're going to be utilizing the T-line to show how you enhance those signals and patterns. So Becky will probably put that link in again before we end here. So there's JetBlue that's done a J-hook pattern. Where do you think the next target is? And this is kind of your kicker signal. Okay, a few more and then we'll. BE. You can see where this closed on a bullish engulfing signal, kind of a double bottom. If you're buying this one, it's on the basis that they supported the 50. So again, a high probability trade setup. Ramp, same scenario. Look at the series of dojis in here. Now where do you think your next target is? Well, first target's probably right here. Now this is what we call your best friend signal. This, if we're putting our 18 best signals and patterns into a quantitative list, the best friend signal is your top one. A doji followed by a gap up. That provides 2 pieces of statistical evidence. One, that the probabilities of being in an uptrend is extremely strong. And 2, the magnitude of that move will be extremely strong. So again, if you're buying here, how long do you hold this until you see a candlestick sell signal and a close below the T-line? Yes, and if you have any problems finding something, just email Abraham at candlestickforum.com and he'll get you to the right spot. Now, what we do recommend is, so that a lot of people are already prepared when it comes time to do a weekend training, that if you've already bought the videos, obviously at a member's discount, now you're kind of mentally prepared that you're seeing things again and having them more fully get better education. I'm reading and trying to answer at the same time. Aren't you afraid of it coming back to fill the gap? Which one was that on, David? Oh, the best friend signal. What did we just do? Was it ramp? Yes, it will come back and fill that gap. It may not be this week, it may not be this month, it may not be that this year, but we're not concerned about that because we know at this point the investor sentiment has gone very strong bullish until the point where they go bearish again. So no, I'm not afraid of this filling the gap because we may not even be looking at it at the time it eventually comes back and fills that gap. TGNA, when it broke out through here, told us we were in wave 3. So here's another criteria. When you see a gap up in the overbought condition, the Japanese rice traders have told us, where do you think most people are buying? They buy exuberantly at the top. So everything that you see in candlestick analysis is merely common sense put into a graphic depiction. And the reason that becomes so effective is when you start realizing that investor sentiment works the same way time after time, it has the process of taking your emotions out of the trades and gives you a much better perspective on when to be buying based upon what investor sentiment is telling you to do. Is anybody else's sound cutting out? Jeremy, you might have to go up and hit the red X and come right back in again. So when you can see something like this on OKTA, there's your J-hook pattern that broke out through this level. That gave you a double confirmation. One, that it was breaking out of this fry pan bottom, and two, that the J-hook pattern was telling you it was going to be, sometimes I pause as I'm looking at my list here to see what I should be typing in next. EHTH. You can see what's happening. There's your little J-hook pattern breakout. That gives you improved probabilities that you're going to be in an uptrend. VSLR. Improved probabilities that you're now in wave 3. So this is why I tell people, observe the obvious. You're in the oversold area. Look what happens every time they're selling this off. They're bouncing right smack dab off the 50 and bouncing back up. When was it time to buy? When you saw the morning star signal followed by a doji sandwich. Remember, that's your McMuffin, your morning sandwich, telling you had a high probability you're going to be in an uptrend. And Yeti, you can tell where the buying is. Again, look at all the indecision sitting right here on your T-line. Now you've got a doji gap up. What do you think your next pattern is going to be? Wave 1, wave 2, J-hook, wave 3. So this is not rocket science. Prices move the same way time after time. You don't have to learn formulas. All you'd have to do is recognize what human nature is doing again. And this is why I say, instead of trying to learn all, now we like to teach all 18 or 20 different signals and patterns. That's so that each individual investor can decide which patterns they recognize the best and can take put it into their trading style. So I've often told people, pick out 3, 4, 5 of the strong trading patterns. You will never run out of trades. You'll always have more trades than you'll be able to handle. And that process now becomes, when you recognize a good trade setup, now you can cultivate which ones are the best ones. I think there's some scanning videos in there also, Randy. Are you going through all your training, all your patterns? Probably. It's going to be a 2-day training. Now, we usually promote it as 2 4-hour days, but the reality is that it's usually 6 7 hours a day. So Yeti would be a good buy on positive trading tomorrow. One of the patterns that we recognize is what we call the scoop pattern. You have a fairly flat handle, and look at your scoop. That usually implies there's going to be a slingshot effect to the upside. Yes, we've got videos on the 12 major signals. We got videos on the high profit patterns. We've got videos on your entry and exit strategies, how to improve your probabilities on a confirmation of a buy signal. It could be a cradle pattern also, but you can see you had kind of a flat handle and then the scoop, and the scoop part was, yes, the cradle pattern. We've got videos on how to recognize when to take profits. Videos on setting up your stop losses. Now, these are all areas too that if you're in the members area, we have these sessions, as you can see, on Monday and Thursday nights. But on a Tuesday or Wednesday night, we'll do a session on how to analyze for the best what do I say, the best patterns, or how to set your stop losses. So even though you have the videos, we'll do them live also. So when you have questions, they can be answered right there. That's all part of the package of the membership area. Okay, so these are the type of things that we dramatically improve our probabilities of being in the right trade at the right time. That's not what I want to do. BA. You can see the buy signals down here. You can see kind of the bobble breakout, but then you could recognize this situation where you had kind of a resistance level. That wasn't a very good shot. But then right here, remember what we said about the left-right combo. There's your doji, followed by a bullish engulfing. Let's get rid of the there's your best or your left-right combo, doji followed by a bullish engulfing. But look at the other elements. The castigs down toward the oversold area, a close just above the T line. Now, if it opens positive the next day, what's it telling us? That it's confirming the left-right combo, which is extremely high probability reversal signal, and it's telling us the T line's not acting as resistance. And as it traded higher, it's telling us this area is not acting as resistance. So we can pretty well recognize we got a wave 1, wave 2. We're buying calls. We're buying the stock right here. How long did we hold it? Until we saw a sell signal and a close below the T line. Now it's coming back up. A lot of people say, well, should we buy it back? That now comes into a decision to say, all right, is this the best place to be putting your money, or finding another situation like this? Guillermo, we put our stop at a level that tells us we shouldn't be in it. So if I was buying this one on a high probability basis that it's trading higher and it closed more than halfway down this candle, I'm right back out of the trade. I'm looking at the spot, not percentage-wise, not dollar-wise. I'm looking at a spot that tells me the bears are still in control. So, so if you see something like this, strong price move, where do these lines come from? Now look what we have. Bullish Harami. Came up through the T line, broke this level. What is our expectation? Wave 1, wave 2, now going into wave 3. RNR. Wave 1, wave 2. This is why we're always watching to see what everybody's doing at specific support levels. Notice what happened when this drifted all the way back to the 50. You had a kicker type signal that broke through this downtrending channel, bounced off the 50 up through the T line. That gave us the prospects of this type of move, which now puts us in an area of wave 1, wave 2, going into wave 3. So everything that we look at is based upon what are the probabilities. So when we had a bearish signal, like an SMAR, we could stay short. There was kind of your bearish doji sandwich that closed below the T line. How long do we stay short? Until we see a buy signal and a close above the T line. However, where's the obvious? The obvious is there's lots of indecision trading right here now on the 50 with stochastics in the oversold area. If we're short, where do we have our stop? Right above the T line. If they have enough strength to come back up, we want to be back out of that position. Are we trying to short at the very high and buy at the very, cover at the very low? No, we're trying to get the high probability fat part of each trade. If you do that, the compounding effect of being in correct trades with a much greater percentage is going to be, will compound your account much greater. We're still short this one. If SMAR gapped up, you could. Yes. Ava is another doji sandwich potential. So if this opens positive, what's it telling us? We've got potentially a doji sandwich. And what would the magnitude of the next price move tell us? That they're probably breaking through this level, giving you a good percentage move to the upside. Okay, let's see. Whoops. Did I forget to do Domo? Domo. Here's kind of your little cradle pattern. Cradle pattern is a downtrend with a headboard, an indecisive bed, flat bed, and then the footboard telling you the bulls will step back in. And notice what the criteria was. They bounced up off the 34. They closed above the T line. If it opens positive tomorrow, what's it telling you? They're confirming this pattern, and they're telling you this downtrending channel isn't there anymore. Okay. Are there any general questions on candlesticks? Lows. You can see where the buying started on lows. Bullish engulfing, hammer, doji, right smack dab off the 200 with stochastics in the oversold area. I can pretty much calculate that wave 1, wave 2, wave 3 was about the same magnitude as wave 1. Oh, yeah, the recording should be out tomorrow morning. So look what's happening in lows. What do we see setting up? Right off the T line. Another J-hook pattern. Now we might be wave 1, wave 2, wave 3. Okay, with that, I guess, Rick, go ahead and do the double line. And then 4.1 seconds, do the next double line. Home Depot, yes, J-hook pattern setting up. Look where the buying occurred, right off the 50. Hammer, hammer doji, bullish confirmation, doji sandwich, more upside. J-hook pattern, look for another J-hook pattern. Lockheed, nothing great here until they can get up through the 200. But you can see that it needs to break out. Valero, whoops, that was the end. Down here, Valero, you can buy if this opens positive tomorrow. Let me scroll back up to the first double line. Netflix, we saw, was not showing anything. Wow, pshaw. Which direction is Netflix going? Pretty much nowhere right now. You need something definite to tell you it's breaking out of this sideways range. Dell, you stay long as it stays above the T line. ABR, little J-hook pattern. This is your classic fry pan bottom J-hook. You can be buying this one on positive trading. Fun. Ooh, what do I got all these here? Move all. Move horizontal line. Now what do we got? Looks like a cradle pattern setting up. You can be buying this one on positive trading, and that looks like it's got some big percentage moves to it, which is what you're looking for. If you're looking for something that's setting up as a good buy, definitely want to make a good percentage return. So they just popped this up here. That's 100% upside. Whiting, stay long. Crude oil seems to be. Oh, I meant to go through the futures. Crude oil is still in this uptrend as long as it stays above the T line. We will be doing a session on futures on probably a Wednesday night here pretty soon. The difference, how you trade, you don't trade them too much differently because the charts look all the same, but how the mechanics of trading futures are different. Melly, this would be a bearish kicker reversal with a close below the T line. Yes. So your warning is the fact that they gapped this down below the open of the previous day. But if this opens lower tomorrow, yes, you definitely can be going short on this. You've got a bearish engulfing, then a bearish flutter kicker. That would tell you that they're probably heading down. Again, there's a little gap right there at the 50. That might be your target. Oracle doesn't trade real well because it's an institutional trader. I probably wouldn't be long or short Oracle on a trading basis. At this point, if you're holding it long term, all you can really do is hold on to it as long as it stays above the 50. Facebook kind of broke out of this level and may even been another level up here. Oh, was this level? So right now you can stay long on Facebook as long as it stays above the T line. NetEase, look what it did. There's your bearish Harami hanging man. When it started trading lower the next day, I told you to sell, or at least when it came back down through this level, where do you think they were bringing it to? Back to the T line. Now you can look to buy it if it opens positive and starts doing a J-hook pattern from here. Noah, nothing. You should have been out of it with it not being able to get back up above the T line. Right now, I probably wouldn't be long or short this one because it doesn't have any direction that we can identify. Save, Very simple. If you're long, it has to open positive and trade positive. If it opens lower, it's telling you the 50 is acting as resistance, confirming your shooting star signal with stochastics in the overbought area. So if it's positive tomorrow, you put your safety stop right here. It shouldn't come back down through the 50. So when you are trading using candlesticks, you can pick very logical spots that tell you shouldn't be in it anymore. Cisco, observe the obvious. The T-line's been acting as a support level. You have your safety stop just below the T-line. Twillo, you can get ready to start buying this one if it breaks this little downtrending channel. You shouldn't be in it. But now you're seeing dojis support off the 50. You can be buying this one. Just make sure your next criteria is it breaks that level. GCP, that's not coming up. Sometimes, is it coming up? For some reason, sometimes they don't come up on this service, and I don't know what that is. So Cutter, another one where you can just stay long as it stays above the T-line. But if I was looking to buy this one, I'd probably be buying it on positive trading, especially if it came back up through today's high. Oracle we did, Estee Lauder. All you can do here is stay long as this is what you call a 45 degree. See the big breakout? And you have a 45 degree. I may have come out here, may have gotten back in, but right now if you're long, you can just stay long as it stays above the T-line. Riot, nothing. Notice what it did. It opened down here below the previous day's open. That's not what it should be doing if it's in an uptrend. If this opens lower tomorrow and you're long, get out of it immediately. That means you've got a bearish flutter kicker setting up. We did Lockheed, right? Needs to get up through the 200. We did GH. GH can still be bought, especially if it comes back up through today's open. Why is that? Because you've got a lot of buy signals down here, bullish confirmation. If it comes back up through this level, it's confirming this signal and telling you that your next wave, wave 1, wave 2, wave 3 is starting. The Qs, this is the short Qs. You stay short until you see a true reversal signal, because right now your Qs are still slowly heading up. Etsy, observe the obvious. Which direction is this one moving right now? Absolutely sideways. You can see you should be able to see the wedge formation, which means I wouldn't be long or short until you see it break out one way or the other. Oh, we did Labu, right? Labu, still sideways. Slow uptrend, but a very slow uptrend. ARQL, you stay long because it broke out of this wedge. Had a move like this, so expect that same type of move to the upside. Use the T-line as your stop. Okay, we did Valero out of order. Stay long, look for a positive open. You can see how it's kind of broken through this resistance level. Dish, J-hook type pattern. but really all you can do, I wouldn't, you could be buying it if you'd like to, but at this point I'd probably be holding as long as it stays above the T line. Rare X needs to open positive tomorrow to stay in it. Siri, stay long. Watch to see what happens once it gets to this level. You got kind of a congestion right here at the T line and heading up. So you watch your stochastics and you watch the next possible resistance level. USAT, nice J-hook pattern. Make sure your volume is pretty hefty. Use the T line as your stop. CRBP, nothing. When you saw this potential J-hook pattern followed by a big bearish engulfing signal, that told you immediately the J-hook pattern wasn't working. You should have been right back out of it. United Technologies, when it broke out, you had a quick pop. If you're long, you can stay long. If you're thinking of going long, you buy it if it comes back up through that level. ARA, would you be out of it after the sell-off? If I didn't get into this one today because I was trading darn GH. But if you got in it, it has to open positive. If it opens lower, what's it telling you about this breakout? It's telling you to back below the T line, close it out. Now, it should be a high probability setup. So if it does open higher tomorrow, then I probably would be buying it because now you've got a doji sandwich. And remember what the psychology is. If this is profit taking and they open up positive tomorrow, it's pretty much telling you the profit taking is over. I don't know when Uber starts up. TRXC, this one I would have closed out today if I was long, because obviously at the 200, or I'm sorry, at the 50, you had a bearish Harami, stochastics turning down. I'd be out of it. I could always get back in if it comes back up through the 50. Nice fry pan bottom. Just make sure you've got good volume on this one. TJ Maxx. Just stay long. You're getting a little dicey up here, so you definitely need to see this open positive. Now you got a shooting star, not a clear sell signal, but you're starting to get a little bit toppy. If it did open lower tomorrow, I'd probably, if I was long, I would start taking profits. Okay, there's still lots of good looking charts out there. And high probability setups, things like bold. If it opens positive, we know we're in wave 3. Zenga, pretty much right here at the breakout level. You can buy it if it breaks out. If you're long right now, you just stay long. Oh boy, whoa, way past everybody's bedtime. All right, we will see everybody bright and early in the morning. We'll see you then.